Good evening, everyone. This is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, mechanical trading systems, trade ideas since 2003. All right, so let's go ahead and get into this market newsletter. This is a market newsletter update for Wednesday, September 22nd, 2021. This is the table of contents. Same general theme as we always keep. We first discuss the general market, look at the S&P and major indexes, KISS systems. We look at a couple indicators, bonds, some sectors, US dollar, commodities, precious metals, GDX, and finally follow up with trade ideas. Cover some recently triggered ideas. I also added a handful of new ones. Quick notes, as you know, it was an FOMC day today. So the Fed will continue to buy at least $80 billion a month in treasuries, $40 billion a month in mortgage-backed securities. If economic progress continues, taper may soon be warranted. So they did bring that in, but they're not starting it yet, and so the market still held up well. As my comments state here, the market so far has had a pretty nice rally off Monday's lows. If you recall from my newsletter video on Monday, I talked about our preferred count that would have the market push higher in that wave B, maybe to the 50-day moving average, 50% fib, something like that. We didn't quite make it to the 50% fib yet. We had a pretty good day. We pulled back off the highs. So the 50% fib is 44.25, the 50-day moving average 44.36. So those are some levels I'll be watching. I'm hoping, is it possible we put in a high today, a wave B? It's possible. I'm hoping we push up a little higher though, guys. And again, we'll go over the charts below. So let's go and get started here. So the first chart below, item number 2, this is the McClellan oscillator systems. Okay, I have 4 systems, one on the S&P, one on the Dow, one on the triple Qs, one on IWM. So as I discussed on Monday, the McClellan oscillator system went long for the triple Qs. I post that on our trading community blog. So those of you who wish to follow these can follow them. Anyway, as you can see, nice trade. Again, think about these as very simple reversion to mean trades. They get in, they get out. That's it. Wham, bam, thank you, ma'am. They don't try to stay in. They're just, they see a statistical opportunity, they get in and get out. Profit factors on these are about anywhere from 9 to 10 PF, which is pretty decent. All right. So again, nice move out of there for anyone who took that. I already updated this on the trading community blog hours ago, so you should be well aware if you're following such a thing. Next. Moving on to our index sector table, let's cover what transpired today. So you can see on the major indexes, nice gain of 1% to 1.5% for the Russell small caps. For the week, obviously, the indexes are still down. They obviously haven't recovered Monday's drubbing, so still down from there. As far as the market sectors, most sectors were up today. There's 21 of them here. A few down, just slightly, like transports, but again, small moves. For the week, most of the sectors are down, as you'd expect. US dollar up 0.3% today, up about 0.25% for the week. Crypto, all up today, as you can see. Still down for the week, but they've had a nice little bounce back. And commodities here, all to the upside. So all the commodities are up nicely. Let's see. So nice moves there. Again, we'll look at several of these charts when we get to that section below. Precious metals, well, gold down slightly, silver up, GDX barely up. So, this area is still not doing much. Again, I'll show you my thoughts when I get there. And as far as bonds, both high yield corporate and TLT were up today. Next, item number 4 shows the economic news calendar. Again, today we had the FOMC. Tomorrow, initial jobless claims, PMI, and natural gas inventories. As you know, natural gas has been, having a heck of a run lately. It's finally pulled back pretty nicely, but there's been some big moves on natural gas. And we'll look at those charts too when we get to them. So let's go ahead and jump into the index charts. First chart below, item number 5, is the daily snapshot of the 5 major indexes. So again, You can see nice bounce today, obviously off the highs. You can see the little tail on the dojis. The Dow stalling right at the 20-day, S&P right at the 9 EMA, etc. All right, let's go ahead and move on and look at these indexes individually. So here's the S&P. So we discussed this chart on Monday. We've had about 240 points pullback from the highs. We expected a bounce. So far, we got a bounce. All right. Again, we got stiff resistance right up here at the 50-day moving average especially. That's been support all year long. So expect this to be resistance. Hopefully, we could see a little more push than this. And let's move on to the next chart. So chart number 7. Here's the daily chart I discussed on Monday. So again, this focuses on this 50-day moving average. There's two of them here, the simple and EMA, both in red. Again, so all year long we've had these shallow pullbacks, to the 50-day moving average, rebound, 50-day moving average, rebound. Again, sometimes you would undercut it for a day, but then recovered. 50-day moving average, recovery, 50-day moving average, recovery, 50-day moving average, recovery. Close enough for government work here. Didn't quite touch it, but again, close enough for government work in my opinion, right? So in our comments here and in our verbal comments, we've been stating we did not think we'd see lucky number 7. Plus, with the seasonality time of year, everyone knows, we've been talking about it, that seasonality is weak from September to mid-October, especially from about mid-September, the couple weeks into September, and that's transpired this year perfectly. Okay, in fact, we were weakening from just the first couple days of September, so that's played out. Another thing to notice here, take a look at the MACD. So the MACD, guys, whenever you're trending up, the 0 line is your support. It will stay above 0. Where now it's pretty nicely below that 0 line, as you can see. The 60 stochastics, that's another one. That is a little bit below 50, so that's another little warning. But anyway, so on this chart here, again, I covered this, that for now we've been viewing this pullback as an ABC of A, so that initial move down into Monday's lows as an A, right? And so far we're working on this B, okay? Wave Bs typically retrace around 50% of the decline. We haven't quite made it there. Doesn't mean we have to make it there. And of course, we can go higher than that, like the 61.8% fib. Okay, so that's why I'm hoping we still get a little bit more follow through. All right, 50-day moving average would be a great area. It's well spotted, all right? So my concern is too many people are watching that, and we're either going to undershoot or overshoot. Okay, market likes to, trick up the masses. So if too many people are watching this, maybe it'll overshoot, and that'll draw enough people or convert enough people who became bearish to bullish. Market has a good way of doing that, so we'll see. But this area, still ultimately watching for this to form a lower high and to come back down again. Okay, so let's clear this out. There we go. And again, after that, then come down on this wave C. All right. If we make a new low, maybe the 200-day moving average. Again, this is the less bearish view. The more bearish view would have this as a wave 1, then a wave. This would be a wave 2, and then you'd be going down on a wave 3. Okay. For now, I'll give the market the benefit of the doubt of this. Next. Chart number 8, here's the 2-hour chart. Steve showed this last night. It shows you basically, the same thing. Has the horizontal lines here, now your resistance areas. You got a resistance right here as well, around that 44.22. Next. Chart number 9, here's the 60-minute chart, and it has this wave count breakdown along with the fibs. So a couple things. You can see this ABC so far playing out with, let's assume that low was an A, B, C of A. We're working on the B in brackets. Remember, the B up is going to be consists of A, B, C. So so far we have a little A, B, and then we're working on this C. Notice you have an open gap right here. So let me clear that out, guys. Again, you have this open gap here, right? We filled part of this gap. So at minimum, I love to fill this gap here. And you can see the 50% fib right in here. The 50-day moving average, remember on the daily chart, is I think 44.35. So that's a little bit above this. And of course, you have this 61.8% fib, which is often a very powerful fib. All right, so we'll see if we can work our way higher. Another thing this could be, this also could be A, B, C of A of B, and then it comes down, forms a lower high. Let me draw that in. So comes down like this, and then up again, and then declines, okay? So we could also see something like this. That would also frustrate people. Think about it, guys. You hear, then it go down, it goes down, and all the bears thinking, all right, it's going to go to new lows, and then it rallies up, they get stopped out, people get bullish, and then the rug is finally pulled. So I could see something like this potentially playing out, okay? So we'll see. We'll ask Steve what his thoughts on that are. And for you newbies, take a look at these moving average ribbons here. See how useful they are when they pinch. Especially right here, the first pinch when it first flips, that's a good short trade. This is a good short trade. You can see it's pinching here. But the difference here is it's pretty wide here. So whenever it gets very wide like this, generally my observation is that in the past is that you need a little more work off. So instead of this just going right down, it needs a more time. So that's why some scenario like this wouldn't surprise me, where you come down. So this would be at, see if I could draw that in here. All right, guys, I'm trying to use this new software. So this could be a C of, that would be A, and then this would be B, and this would be your C of, and that would be your B, okay? And then down again, and this would be your C. So hopefully that's clear, but that's a couple things I could see playing out perhaps. All right, enough of that. Let's move on. Chart 10, here's a 30-minute view, nice and clean. Here I drew a little wedge pattern that could be forming. Okay, also you could see the fibs, you could see that open gap a little clear, everything else. Okay, what I said above applies. This is just a 30-minute chart. Next, chart 11, here's a 15-minute view. And finally, chart 12, here's a 5-minute view, shows you what transpired today. Here's the FOMC, we popped and we chopped around. Still closed up nicely today, up 41.5 points for the S&P. Next, chart 13, moving to the KISS charts. As you know, that DVT was hit back here. We bounced off the ATR here. Again, pretty much the same thing. You're below the ATR up here. 50-day moving average here is resistance. The 60 stochastics testing the 50% area, trying to initially price bounce from there. But I'm ultimately looking for a lower high. Next. Chart 14, here's the cycles. So, like I said, we've lost those ATRs and all the time frames, their resistance. On the shorter time frames, 120 minute, we're kind of right into this ATR. You can see how stretched we got on Monday's sell-off. Look how wide that ribbons. When ribbons get too wide, reversion to mean. They need to bounce back. Okay. Notice on the 60 minute, we got a sell cycle here. little ABC up. So that could lead to a little pullback here. And remember my example on the 60-minute chart above, where we could pull back, form that lower high, then rally again. Next, moving to the triple Qs. Here's the Qs. Again, I also expect these to form a lower high. Ultimately, we'll see. 9 EMA is your resistance here. You can see it's stalling a little bit at the 50-day, but if the S&P pushes higher, I think this will go higher. This is your resistance zone. Next, chart number 16, here's the 60-minute chart. Clearly that rounded top we showed a couple weeks ago played out perfectly, and these were low-risk short opportunities on the back test of this trend line resistance, which was former support. You could see here on Monday, it got oversold. We took out this resistance area, and here's your 50% fib area. So same deal. I'm ultimately looking for this to form some sort of lower high with the S&P. Next, chart number 17. Here's the KISS chart. Notice on the 60 stochastics, right at that 50% area. If you're new to Breakpoint trades, we use the 60 to link stochastics a lot. You'll find that the 50% area in major uptrends become support, just like you see back here in May. You see how it bounced right off of it. I'll do a separate video on that one day, but you can see we're right there. And so far, price has bounced a little bit from it. Next, chart number 18, here's the cycles from the daily all the way to the 60-minute. On the daily, you got a buy cycle, so interestingly. But again, this could rally up a little, form a lower high. You can see your ATR resistance up here. ATR resistance on the 195-minute, 120-minute ATR resistance, and we got the sell cycle on the 60-minute. Next, chart number 19, here's the IWM Russell. Nice recovery so far. Again, as you know, it's been in this huge range since March. Next, chart number 20, here's the 60-minute view I discussed on Monday. Or in the weekend, actually, this open gap that was a magnet, and that was filled on Monday, and so far we've bounced. But you can see we've bounced and stalled so far right into this broken uptrend line. Remember, that becomes resistance, and so far it's acting as that. So that does it on the major indexes, guys. Let's move on. Chart number 21, here's the VIX. So the VIX did close back inside its Bollinger Bands today for a VIX Bollinger Band buy signal per the comments here. I need to add that vertical line. So the vertical lines on this VIX chart are wherever the VIX closed outside the bands and then back inside. And you can see via the arrows, all year long, those have been good buy signals. Now, a lot of them have resulted in new highs. This one did not. It resulted in a bounce, and you came down again. That's kind of what I think is going to happen here. I think this will produce a trade, but it'll just be a trade, and then ultimately it'll come down again. But this did go on a buy signal today. That's also why I'm hoping that the market will push higher for a little bit as well. Next, chart number 22 is a 15-minute chart. Steve had it last night. I meant to take this out, so let's go ahead and move on from that. Moving to bonds, chart number 23, TLT, 20-year bonds, starting to break out of this larger coil. So the fact that the Fed isn't going to change anything yet, so maybe this will continue to go a little bit higher. Okay. Technically looks bullish, increase in volume. You have a nice large coil that you're starting to break. Next. Chart number 24, J&K, high yield corporate bonds. They came down on Monday hard, but notice where they bounced, right at this support. This was previous resistance, becomes support. Remember, that's a tenement and technical analysis. So far, we've rallied back. Hasn't made a new high yet, but bounced right off that support. Next. Moving on to a few market sectors. Transports, it was down today. Again, they've been downtrending since May. Bounced off this little support area. Today, stalled right at the 9 EMA. No changes major technically on this chart. Next. Chart number 26, XLF Financials. Little bounce today here. I drew a downtrend line as your longer term resistance. Right now, your 50-day moving average acting as resistance. Next. Chart number 27, XLK Technology. So it broke this parallel channel on Monday. we've rallied back to retest it. That is resistance, okay, and the 9 EMA. But if the market pushes a bit higher before it forms a lower high, I could see this poking back inside of here. But for now, it is at resistance right here. Next, chart 28, XLE Energy. So far, we got a little lower high in place here, rally back. This is your main resistance. I do have an energy stock in the newsletter and the trade ideas that look decent. Some of the energy stocks look pretty good, guys, so we'll see if this area can take out. Crude oil looks pretty good. This has sort of an inverse head and shoulder look to it. Next, chart 29, oil services. Now, this doesn't look as strong as oil OIH. You can see this stalled right at this broken trend line here. See that today? Let's move on to commodities. Chart 30, crude oil. So perfect technical chart here. We broke out of this channel a couple weeks ago, rallied up, pulled back, held this broken downtrend line as support. Again, in technical analysis, you break resistance, it becomes support. I mean, looks bullish, doesn't it, guys? So if this pushes higher, that could help the energy stocks. Next, chart 31, natural gas. Again, natural gas has had a really big run this year, especially from the August lows. Got very overbought here, some divergence. You can see the doji type candlesticks here. Nice pullback down to the 20-day. Now, this could be a bounce area. My only concern is some of the intraday charts don't support at least a good bounce here, and I'll show you that. So chart 32 is UNG, natural gas ETF, and you can see the same thing. It's right back to its 20-day moving average, just like the commodity itself. The good thing about natural gas, we can look at a lower time frame, so let's look at that. Chart 33, UNG on the 60-minute. The 60-minute here, you don't have any real MACD divergence, so it doesn't look like a good bottoming pattern. So that's why I like to look at a day. When I look at a daily, I like to zoom down to the 60-minute time frame, guys. And to me, this almost looks more bear flaggish. You can see your stochastic's already overbought. So to me, this doesn't support a great bounce in natural gas. But again, natural gas inventories are tomorrow, so that can sometimes spike price, so we'll see what that does. Next, chart 34, copper. Nice rally back today from the 200-day moving average. Again, some resistance here. Main resistance is the downtrend line here. Next, chart 35, DBA. Little bounce back to the 9 EMA. Really nothing else to say about it. It's been pretty choppy lately. Next, chart 36, uranium. I mentioned on the weekend that I thought this was a low risk buy near the 20-day moving average. I also talked about this on Monday. So you did get a trade out of it, but notice some black candles here. Again, I did say that I don't think it's going to go to new highs, that it's going to be the form of lower high, and it's going to ultimately be choppy. My suggestion was that if you bought it on Monday, to view it as a trade only. Take profits. Next. Chart 37, platinum. Someone asked me to look at this. Nice day for platinum. You can see you've had this double MACD divergence with today's lows. Nice break in this trend line. Testing the 50-day moving average. It's got to get above that. You can see. But nice move there. We'll keep an eye on that going forward. Next. Chart 38, platinum ETF, PPLT. Also decent chart off the highs, but remember, platinum commodity trades after hours. I think it's up over this evening, and the ETF does not. So, but this looks pretty decent. So something to monitor. We'll see if it's up tomorrow. Next, chart 39, Bitcoin. Little bounce here. Steve pointed out this observation yesterday, this perfect ABC pullback and symmetry, and you can see that ended up matching the low. Nice call there. The bullish view here is you have an A, B, C. Again, ultimately, I'd want to see it form a higher low here and continue higher, but so far, good start. Next, chart 40, Ethereum. As you know, this cratered through that support on Monday. Little bounce back. Now on this, again, this trend line is now resistance. right? So let's move on. Chart 41, UUP, US dollar ETF. Nice rally in the dollar. The dollar looks pretty bullish, doesn't it, guys? Ascending triangle look to it. Next. Chart 42, gold. Little bounce in gold. Again, it's been a choppy mess, let's be honest. Got a little downtrend line resistance here, horizontal resistance, major support down here. Whole lot of nothing. Keep an eye on the ratio here as the stocks start to lead. You can see it, the stocks led a little bit today, but you need more than that. I have a downtrend line in the ratio to monitor. Next. Chart 43, silver, bouncing off this support area. You can see it was support back in December. It stalled at the 50-day moving average there in early September. Again, this would have been a low-risk trade long there. You can see some MACD divergence. We'll see if that can build or not. Next. Chart 44, GDX. Steve showed this potential wedge last night. You can see well off the highs today, stalled right at the 9 EMA. You do have some MACD divergence building. If this is a true wedge, this still may need some time to work in here. You know, it could still, let me draw that in. You know, it could perhaps work up, work down, and then this. So it still may need to chop around in here if this is a wedge. All right, next. Chart 45, here's the 60-minute chart. Quite honestly, though, to me, the 60-minute chart here doesn't look too pretty. Look at the MACD recycling back to zero. Kind of has an ABC bear flag bounce look to it. Next. Chart 46, KL. Honestly, as far as the individual gold stocks, this is the big boy. This is the one that's holding up best out of all of them. I'm not saying that, you know, I want to buy this. I do own a little bit of a buy, by the way. But if the sector does eventually bottom or form that wedge, this may be one to watch because it's been holding up the best. And so it may lead once the sector does bottom. Something to monitor. All right, let's follow up with trade ideas. So chart 47, Apple or Crapple, as I like to say. Again, it's not really one of our trade ideas. We like to follow it as a barometer since it's such a large component of all these indexes these days. And heck, even the damn Fed bought Apple last year during that pandemic decline. But anyway, lost this trend line support. It is now resistance, guys. So this area up in here is resistance to watch. This is your longer term support. I do believe it will eventually come down to that area. Next. Chart 48, Google. As you know, it bounced off the 50-day on Monday. Little bounce back. Again, it's got a lot of work to do up in here. Next. Chart 49, NCMI. Look at this puppy. This was a long idea of mine I thought I liked last week. I mentioned it too last week on Friday when it was holding up much better than the market. Gave a great trade to the 50-day. And then even on Monday's sell-off, it was up. And look at it, it's followed through nicely. What stood out about this pattern to me? I like these little basing patterns and when the volume looks like that. This is one that I went long here with a stop right here. Let me draw that in. So my stop is right here at that higher low inside the pattern. So I went long early and then I bought more once it broke the pattern. Obviously, I took some profits at the 50-day, and I still got a little bit left. But this is what I like when you have this general bottoming pattern. You can see how the 9 and the 20 moving averages came together. You get this nice volume. Everything just looked great about it. Okay, let's move on. Chart 50, Snap. We've had this on the list. Finally busted out today for a long trade. Next. Chart 51, Jets, the airlines ETF. So on Monday, I discussed airlines. I said they looked pretty bullish. Well, then on Tuesday, they gapped up and sold off. If you bought it and you were worried, you're now back to positive as it's totally regained that. So that's good to see. Next. Chart before I going back to that one, Jets. Again, guys, sometimes you got to give stuff more than a day. Be careful about overreacting to noise, like on that Jets. You know, yes, it's, you know, if you bought it on Tuesday morning and it sold off, that sucked. But sometimes you got to give stuff more than a day. All right, just consider that.
By the way, I can tell you about the weather at a specific.
All right, so chart number 52, UPST. This was a long idea Steve listed on the weekend, and it's done very well. Congrats if you got it. I did not play this one personally. Next. Chart number 53, JBT. Really nice move. Good trade. Take some profits. Next. Chart number 54, PAG. Long idea from last week. Again, it had that pullback. I talked about this on Monday. I said it's pulled back, but I said that broken trend line was support. And you can see it didn't actually get back to there, but it held the 9 EMA. So if you were still long some of this, you could have held pat there. Nice rewarded. Look at that volume expansion. Next. Chart number 55, 80N. This is one I mentioned on the weekend. I said I was looking, and on Monday I said I was looking to buy a pullback, and you did get that. You got it yesterday into this trend line, trying to push a little bit. Next. Chart number 56, Qualcomm. Obviously that short worked out well. Maybe looks like it's probably going to form a bear flag here in my opinion. Next. Chart number 57, EMR. That's also worked out very well, that short. Next. Chart number 58, Shop. So far it's still hanging in there if you want to give it a little room. I wouldn't want to see it go back above this trend line here. Next. Chart number 59, Cliff. This is obviously given a great trade. I would have taken profits here, guys, if you were short this sucker, the 200-day. Next. Chart number 60, CGNT. Here's an example of one that was a long, it triggered here, and then on Monday it gapped down. If you were long here, you'd have been stopped out here, unfortunately. Okay, things like that happen. Now, if you're a great trader, you could have flipped short. I didn't do it, but you could see that would have actually worked out very well. Look at that dump. Next. Chart number 61, MDIA. Steve gave us a long idea last night, and it did give a trigger today over this trend line. Went all the way to $10, right? So that's actually a nice trade, but if you didn't take your profits, came back down. This is a wild sucker. So something like this, you want to be, this isn't something to trade if you're working a day job. Okay. Next. Chart number 62, RVMD. Flag pattern, it broke out yesterday. A little pullback today, still looks okay. Next. Chart number 63, Disney. Steve commented on the other day, and I agree with him. To me, this chart looks quite ugly. Honestly, this is one you may be at a short up in this area. And if this sucker loses this area, it's going to be bad. All right. So, maybe something like this. Boom. All right, moving on. Some new ideas. Chart number 64, EEIQ. Here's an example of a basing pattern. I like this. I like the volume. Let's see if it can bust up through here. Again, it is quite volatile, guys. Next. Chart number 65, blue. This has been on the watch list for about a week. I still like this one. It's flagging and it's bottoming. So I like how it's bottoming here. The moving averages here are pinched. Still one to monitor. Next. Chart number 66, SLI. Here's a new one just for a trade only. Over this resistance at 711. Next. Chart number 67, GH. One from Steve. Still valid if it can clear this area. Next. Chart number 68, DVN. It's an energy stock. A breakout. Next. Chart number 69, CYTK, breakout over 34.45. Next. Chart number 70, CTXR, biotech play. Maybe a lower risk going off the bottom. It is low priced. Be aware of that. See if it can power through here. Next. Chart number 71, EPZM. One's been on the list. I'm still keeping it here, even though this is my resistance. I'm watching down here to see if it can find support. Okay. Notice volume's been lighter in this pullback. Next. Chart number 72, last one, BCTX. Kind of a cup and handle, something to monitor. All right, guys, that does it. And we will see what happens tomorrow and on Friday. Have a good evening and take care.